Thank you very much, Nicholas and Olga. It's great to be back in Singapore, a wonderful city. And we had a lovely day yesterday, sunny, walking down Orchard Avenue with all the people. Asia seems to be really rocking. So YieldStreet is a fintech startup that's democratizing wealth management. Think about high-yielding asset-backed investments that PEs love, buying ships from banks that are exiting shipping, or buying ships that a ship owner is going to use or service a COA. The PEs have immediate money available to fund these situational funding needs and buy the vessels. YieldStreet does the same. We have a warehouse of 100 million, and we are able to fund such situational funding. Except we take that funding and we put it on our platform and we sell it to retail, $10,000 a piece. Now, I'm going to show you a video, and on the one side, on the left-hand side, you'll see how much is left of an investment we put on. And on the right-hand side, you're going to see the time lapse. So 18 minutes and 50 seconds. That was our second ship funding we did. And nowadays, when we put one up, it sells, most of our investments sell in under 10 seconds. So we have nothing on the platform. If you go to the platform, everything's sold. First, we built the tech. Our technology platform allows an investor to go on and within a few minutes to register. Once we funded something, we put it on, and the investor can go on and buy a piece of that. The interest he gets at the end of the month goes straight into his bank account. And there's no cost to reconcile, no cost to send the money, no cost to check reconciliations. It's all automated, no cost to us. The other thing is that YieldStreet doesn't have to fund anything. We haven't raised capital that we need to spend. Our capital is sitting in people's bank accounts. So bank accounts around the world, in the US for now, that is the capital we draw on. We see a project that we like, the owner we like, the project makes money, we fund it, package it, socialize it on the platform, and sell it. So YieldStreet launched in 2015. Today we have 125,000 subscribers. Our subscribers are growing at over 10,000 subscribers a month. To date, we have invested $650 million on the platform, assets under management. And since May last year, when we started shipping, we've done $140 million in shipping transactions. Well, we had a banking panel. And think about banks for a moment. Beautiful buildings in the center of the city, expensive. Many branches, expensive. Many employees stamping pieces of paper, the manager checking the pieces of paper, expensive. Lots of antiquated legacy systems, very expensive. So banks take your deposits, my deposits, and they pay nothing for it. We get zero interest. So when bankers talk about cost of capital, there is really no cost because they paid nothing for it. The cost is sitting in all the things that I previously mentioned. And there's another cost. Banks took your money, my money, and they bought credit swaps. Of course, they lost the money. They created a financial crisis, and then the politicians came and put on some taxes, special crisis taxes, to bail the banks out, to save the banking system. But a banking system that is fundamentally broken. And that's what fintech is fixing. Last year, $150 billion was spent on funding fintech startups. Fintechs that include payment platforms, that include financial management, back office, that include lending tech, and wealth management. YieldStreet, a month ago, raised $62 million in a Series B funding. And we're going to use that to create a secondary market for our investments, to be able to take money from investors outside of the US, because right now we're only in the US, and we'd like to come to the Middle East, to Asia. And so we're going to be doing that this year. We partner with banks. So we want banks here in Singapore and elsewhere in the world to prosper, but they will need to evolve. Banks currently have all the customers, so they have all the distribution. So the question becomes, can fintech figure out distribution before banks figure out technology? We believe that with the funding we have now, we can put more great product out there. We can attract more customers as we are doing, and we can revolutionize and democratize wealth management and the banking system. So that's our flywheel. So if you have great shipping opportunities that need funding, give me a call. So I'm over in 6 minutes. I have 10, but I especially leave time because I know there's stacks of questions out there. Be happy to take questions.
The question?
I'm sorry to have shocked you.
Hello. Yeah, my name is Prashad. Okay, I have no knowledge of the fintech, but just as you said, you want to kill the bank, which is a cost or expense. So how does this model work to interconnect the people who has the money in the bank accounts, and you take it from there to finance something?
Okay, now that's a great question. So we first fund, we underwrite a project. So we see a project that we like, we have 100 million, we take 20 or 30 or whatever it is, and we fund the project. We then create the prospectus, put a credit memo there, explain what the project is, upload it onto the platform, and then we socialize it. We start talking to our investor base, telling them that this will be available next Tuesday at 6 o'clock. And every day we talk to the platform and we answer questions. And 6 o'clock next Tuesday, we open it up for investment. And all those people that are on the platform can buy a piece of that investment, $10,000, $20,000. And as you saw in the video, it sells immediately. So we get all the money back, and our warehouse of 100 million is 100 million again. So next week we fund something else. Sell it. What is?
What is the security to the lender? Suppose I put money in the bank and bank is funding to some other project, but I can still go back to the bank to take the money.
So our security is the ship. So we like to fund, for example, old ships, because if the earnings are good, we have a COA or some special situation, we can sweep, cash sweep, write the vessel down to below scrap within a short period of time. And so our investor's principal is secure. And having the cash sweep, we can pay the interest that we have promised to the investor. So our security is the hard asset, the steel. But I like your questions. Thank you. Anybody else? There's a question at the back there.
My name is Torkel Wold from OMP Capital.
A little louder, please.
My name is Torkel Wold from OMP Capital. With so many stakeholders, how do you decide to foreclose if you have to? I mean, what kind of processes would be needed to foreclose?
Our investors. Is that the question?
Yeah, let's say that there is a default under the loan. I mean, do you have certain kind of benchmark for closing, or is that like a subjective decision that the management of the company is taking?
Okay, so we are the managers of the investment. Our investors rely on us. We haven't had a default since the platform started, largely because one of the first things we look for is how we're going to get our money back. So we don't compete with banks to go and fund a new ship, because that new ship has a very long life, and we don't know what's going to happen in the cycles. We have funded old ships, so an old Cape or an old VLCC that's going to work for another 3 years and as a floating storage or some special earning, has an earning capacity. So if there is a default, we have the asset that we can then take back to make sure that we can return the capital, the principal, to our retail investors. Did I answer the question?
Yeah, I think so.
Thank you. One last question. I've got like 30 seconds. Thank you.
So which entity regulates this? Is it SEC or some other entity?
Excuse me?
Which is the regulatory body for this?
The SEC.
SEC.
The Securities Exchange Commission. Nicholas, thank you very much. Thank you.